Hi, Saen Higgins here. Are tax liens a good investment? I'm going to let you be the judge of that. What I'm going to do is methodically go through step by step what they are, how they're created, why they're created, what the return are, what the risks are. You need to know the risk, and I'll let you be the determining factor in that. But I'm going to tell you this. Stay tuned to this whole video. At the very end, not only am I going to show you how to profit from this in a big way, but I'm going to show you how to mitigate any of the pitfalls that I see beginning and novice investors fall into every single time. So stick around, I'll show you how to do that. By the way, if you like this content, just hit the thumbs up, hit the subscribe, and if you have a question at any point that you don't feel I cover, or you want more covered, or just a question in general, type it in the comment section there. I'm actually the one that personally answers all those. Those help us keep this whole algorithm, whatever that is. So let's talk about, are tax liens a good investment? I'm going to let you be the judge of that, okay? So let's think about this for a minute. Tax lien certificates have been available in this country for well over 300 years. And that, matter of fact, longer than we've been in country. I first heard about it back in the 90s. There was once an article, I don't remember if it was Barron's or Wall Street Journal, we've all heard of those publications, but one of those good publications out there. They called this one of the best kept secrets on investing in the United States today. See, this is where a lot of banks have put their money for Bank of America, Wells Fargo, Citicorp, some of your larger insurance conglomerates like Northwestern, New York Life. Years ago, when I worked at New York Life, I found out that they'd been using this investment strategy for 130 years. You know, establishing this has been around for a while. So why would the financial periodicals out there call this one of the best kept secrets available in the United States alone? There's a couple of reasons you might want to write this down. First of all, this is going to offer you interest rates 16%, 18%, even as high as 25% return on your money with virtually no risk. Because at all times, your money is backed up by law. That's right. This is a state law, okay? This is mandated in the state statutes that you're going to get these interest rates, that you have underlying securities on that and all that good stuff. I mean, think of it like this. Let's compare apples to apples. Let's compare banks to tax lien certificates. When you put your money in the bank, let's say you buy a 1-year CD, whatever they're paying at the time. I don't know, maybe they're 3%. So you go into the bank and you say, here's my money, and I want to buy this CD for 1 year, and you're going to pay me 3%, and that's why they give you the sucker, I guess. Anyways, but you're locked in, okay? Nothing can change that, nothing can do this. This works the same way. Tax liens work exactly the same way. The only difference is I'm locked in at 16%. I'm locked in at 18%. I'm locked in at 25%, and nothing can or will affect my yield or your principal. I don't care how you slice it. That helps me sleep easier at night. And also, like the bank, okay, there's guarantees on not only the interest rate, but you've got the underlying security. See, if a bank goes under, it's insured by the FDIC. Okay, so they'll give you your money back, but no interest, but you're insured of your money. This is going to work the same way. The only difference is, I don't care, there's no limit. See, with a bank account, there's a limit to how much money you can put in at $250,000. This has no limit, $10, $10,000, $10 million. Every single dime, again, is mandated by the state. And so the way it works is I'm going to be locked in at 18%, 20%, 25%, and nothing can or will affect their yield or your principal. Now, here's the cool thing. For those of you that like real estate, and hopefully you do, or you wouldn't be watching this right now, I'll show you a very unknown secret within tax lien certificates where you can acquire real estate right in your backyard or anywhere around the country for 4 to 10% of the fair market value. Now think about this. Think about buying a $200,000 property and only paying $15,000 to $20,000 for it. Boom. And owning it free and clear. No mortgages or loans on the property. Wouldn't that be nice? Of course it would be. Now I know what you're thinking. You're thinking, oh, Saen, this sounds great. This sounds a little too good. This sounds a little too good to be true, right? And with the little time I have, I'll show you not only this is true, but I think this is the safest and most lucrative investment opportunity that can and will provide you and your family with financial independence. But there are some things you need to understand how this works. First of all, what is a tax lien certificate? Okay, It's a first position lien on a property due to delinquent property taxes. See, in over 2,000 jurisdictions across the United States, once a property owner becomes 1 year delinquent on the property taxes, the county is not allowed, they're obligated to bring those taxes up for sale. That way people like you and me can give the money to the county that they need to operate. Schools, bridges, fire department, law enforcement, all of these things. Now, you're not buying somebody's house. Let me repeat that. I'm not buying somebody's house. The property owner probably doesn't even know this is going on because nothing really happens. I'm not causing a lien by buying the lien. The lien is already there. The county's just like, dude, we need our money. Okay, so I go in there and put up the money, and then I take on the position of the county. The property owner still owes the county the money. So when the property owner comes in to satisfy those delinquent taxes, the county says, oh, here, Mr. Investor over here has got the money. Within 5 to 10 business days, they'll send me my investment back plus the interest rate. Everybody's happy. Okay, what if they don't pay? Okay, great question. Okay, they don't sit there and go, okay, you got 1 month or 2 months or whatever. This is what they call a grace period. See, what you and I are doing by putting up the money for the delinquent taxes, you're really buying the property owner what? Time. Okay, so I'm giving them time. And so actually the legal term is called a redemption period. Now that redemption period can be anywhere from 6 months on the low side up to 3 years on the high side, really depending on the municipality. So what they say is, look, Joe Schmo over here has bought a lien on the property. Don't worry about it. You've got 3 years. So 3 years from the time that lien was sold to the time that we can foreclose on it, okay? That's right, I said foreclose. If that property owner doesn't come in within that 3 years, everybody's kind of saying, hey, look, enough's enough. You've got to do something. So this investor over here can say, I'm not getting my 18%, but I can foreclose on the property. And thus starts the process. So what happens is he's got to notify everybody that's got a financial interest in the property. That would include banks, seconds, if somebody's got a mechanics lien, whatever, it doesn't matter, IRS, everybody's got to get notified, hey, you guys, I'm foreclosing on the property because nobody satisfied these delinquent taxes. And if you don't come in 60 days, 90 days, 100, whatever that is in that area, your position is going to be wiped out. Now, let me stop right there. What do you mean I can wipe out the mortgage? Yeah, you can. And the mortgage companies, they're not like oblivious to this. They know it. If you ever read a mortgage, like really read the fine print, type of deal, it says if you fail to pay off your property taxes, thus jeopardizing the bank's position, they can pay the taxes off and call your loan due. So they know this is going on, okay? But make no mistake about it. If you foreclose on a property due to delinquent property taxes, there's only one solution. You foreclose on the property, and if nobody protects themselves, you will end up with the property. You will own it free and clear. There will be no liens and encumbrances on it. This is how, my friends, you get a fully improved property, all liens and encumbrances eliminated for a couple of years in back taxes. Would you call that a great deal? Would you call that a phenomenon? I call that an unbelievable deal. And that's how it gets started. Now, there's a lot of things you have to do to get to that point. But my question in the very beginning is, are tax liens a good investment? Okay, I think you can kind of see where we're going with this at this point, but we're not done. Understand that there are over 5,000 taxing jurisdictions in the United States. That's right. So every state has their own set of rules, own set of laws. Then every county within those states interprets them differently. Now you may say, oh, that sounds really confusing. It kind of is, but it kind of isn't. What do I mean by that? Well, the fact that each county has a little different set of rules on it actually eliminates some competition. So hedge fund companies, the big investors out there, it's really not in their best interest to come in here and gobble those up because they can't. They got to send them individually. That's the only way they can do it. And that makes it an opportunity for you and I, and has been for decades. This is not some get-rich-quick scheme that just popped on the scene. Now, let me tell you something. You've got to go know the right area to go. You've got to know exactly when the sales are happening. You have to know every little detail about that property to make sure that this investment is going to return the numbers that you're talking about. And there's no better way to do it than this. I've got a brand new course for free for you that literally will methodically walk you through everything I just talked about there and more. So by the time you're done with that course, you will have a comprehensive understanding on how you and your family can provide yourselves with financial independence. This is Saen Higgins saying God bless and good luck.